Investing can often feel like this chaotic storm of numbers and charts and just noise. But what if there was a simpler way, a philosophy that could boil it all down to a timeless set of principles? Well, today, we're going to dive into the Tao of Warren Buffett, the guiding way that has made him arguably the world's most successful investor. And you know what? It all starts with two rules that are almost deceptive in their simplicity.
Right here, this is it. Two beautifully simple rules. Now, on the surface, they sound, well, kind of impossible, right? Never lose money. In the stock market, it seems absurd. But these two rules, believe it or not, are the absolute bedrock of his entire approach to building wealth. And that's the big question, isn't it? How on earth can anyone actually follow these rules when markets are swinging up and down like a yo-yo every single day? Well, that's exactly what we're here to unpack. The answer, it turns out, lies in a complete and total shift in perspective. Okay, so this rule, it's not about avoiding risk completely. I mean, that's impossible. No, it's about protecting the real engine of wealth creation, compounding. Think about it like a snowball rolling downhill. If a big chunk of that snowball breaks off near the top, it doesn't matter how long it rolls, it's just never going to get as big. So protecting your starting capital, your principal, that isn't just a defensive move. It's the absolute key to unlocking that incredible exponential growth over time. And that's exactly why people hang on his every word. These sayings, they're not just clever little tips or one-liners. They're more like deep principles from a master teacher. The more you really think about them, the deeper the wisdom gets, and it starts to guide you on a path that goes way beyond just picking a few stocks. So how do you actually avoid losing money? Well, the very first step is a huge mental shift. You have to stop thinking about stocks as these little ticker symbols flickering on a screen. Instead, you have to realize that what you're actually buying is a piece of a real, living, breathing business. And this, right here, this gets to the absolute heart of the whole strategy. See, price and value are almost never the same thing. The market gives you a price, and that price can be wildly emotional. It's driven by fear or greed or whatever was on the news 5 minutes ago. But the value of the business, that's something different. It's something much more stable. And the secret to winning this game is knowing the difference between the two. Let's break that down, because this is the key. Price, that's just the chaotic noise of the market. It's what people are feeling today. But value, that's the rational reality. It's about what the business is actually earning. Buffett's genius is that he lives in that world of value, but he patiently waits for the world of price to make an emotional mistake and offer him a fantastic bargain. And let me tell you, when you get this right, the results are just staggering. Take 1973. It was a nasty bear market, and Wall Street valued the entire Washington Post company at a tiny fraction of what its assets were actually worth. Buffett saw the true value. He invested about $11 million, and then he just held on. That stake eventually grew to be worth over $1.5 billion. That is the power of buying value, not price.
So what's the playbook? Well, it actually boils down to these 4 pretty straightforward steps. First, find a business that's simple enough for you to understand. Second, make sure it has some kind of durable competitive advantage, a powerful brand, a unique position that protects it. Third, you wait for the market to get foolish and sell it to you on the cheap. And finally, you go in with the mindset that you're going to hold it forever, almost like a marriage.
Okay, so now you know what to look for. But this next skill, this is arguably the hardest one of all. And it's where most people really trip up. It's patience. It's the discipline to literally sit on your hands and do nothing until that perfect opportunity finally shows up.
I absolutely love this quote because it's all about humility and keeping things simple. Buffett isn't out there trying to be a hero, predicting the next big, complicated technological revolution. Nope, he's looking for the obvious, easy wins. He's searching for investments that are so simple and so clear that buying them feels like stepping over a 1-foot hurdle. And this brings us to a really crucial concept. Your circle of competence. Think of it as your intellectual home turf. It's the collection of industries and businesses that you genuinely understand inside and out. And here's the thing, the most important part isn't how big your circle is, but how well you know where the borders are. So what does that look like in the real world? Well, for Buffett, he understands the simple, durable economics of things like selling chewing gum, soda, and car insurance. He's famously said for decades that he just doesn't understand complex technology. So what did he do? He just stayed away. Plain and simple, he sticks to what he knows.
This is where Buffett uses this brilliant analogy he got from the baseball legend Ted Williams.
In baseball, right, if 3 good pitches fly by and you don't swing, you're out. But investing, he says, is a no-called strike game. You can stand there and watch thousands of pitches go by, bad ones, mediocre ones, even pretty good ones, and there is zero penalty. You get to just wait and wait for that one perfect pitch right in your sweet spot.
So when that perfect pitch does finally arrive, what does it look like? Well, it almost always appears when the rest of the world is panicking. This section is all about having the right mindset to actually act when everyone else is running for the exits.
And this leads to what is probably his most famous saying of all. It's the ultimate contrarian mantra. When the party is roaring and it seems like everyone is getting rich in a bull market, that's the time to be careful, to be fearful. But when the market crashes and there's blood in the streets, when everyone is terrified, that is the moment of maximum opportunity.
This collective madness of crowds, this is what he calls market folly. And the patient investor sees this not as something to be scared of, but as a service. Market panics and crashes are the very things that create the bargain prices on those wonderful businesses he's been waiting to buy.
You see, this completely flips the script on how you should view the market. You are the boss, not the market. You don't take your orders from its daily mood swings. You just look at the price it's offering you today. If it's a foolishly low price for a great business, you act. And if it's not, you simply ignore it and go about your day. The market is your servant, not your master.
You know, when you step back, you start to realize that all these principles, they add up to something way bigger than just an investment portfolio. For Buffett, they form a kind of blueprint for how to conduct business, and really, how to live a successful life.
And this really gets to the heart of it all. This reveals his ultimate focus. The most valuable asset you or any business can possibly have. Well, it's not something you'd find on a balance sheet. It's your reputation, your integrity, your good name. It can take a lifetime to build, but it can be destroyed in a single foolish moment.
So let's just end with the question that Buffett himself poses. If you really think about that your reputation is your most valuable and your most fragile possession, how does that change the decisions you make? Not just with your money, but in your career and in your life. It's a pretty powerful thought to leave you with.